Hello, everyone. Welcome to Next Level Humanity podcast. I have a very dear guest here, dear Olga. Hello, Olga. How
Hi,
are
I'm
you?
good, thank you. Yourself?
Yeah. Whereabouts in the world are you right now?
In London. I'm in
In
London.
London. Yeah. Whereabouts in London?
I'm in central London, yes.
Okay, great. So, yeah, we'll start with your story. You have advised both tech and blockchain startups, and you also founded, after that, your own consultancy. Let's start with your own story. So, your background and how did you end up by being a consultant? And how did you
Sure.
end up being a founder, advisor, board member, all of it?
So I've started as a financial professional and I worked on buy side and sell side. So I work on the asset management side, but then I moved into investment banking. And then after a while, I was so curious. I was so much of a quick learner that I just found that working for a corporate it would have taken me longer to see interesting projects. And so I decided to set up basically my consultancy firm. My journey, though, has changed after a bit. So I got back again into banking. And then I decided at some point to take sometimes to set up my own charity as well. So I'm also a founder of a charity. So obviously it's in a different sector. And during the period, I've managed to create a collaboration with technology companies, so tech companies. And from there, I started my journey as an advisor also for tech companies. But I have to say, the startup world, it was not a new word to me because as a financial professional, I used to have fun basically with startups. And when I say have fun with startups, is that when you work basically in a bank, you get to, at least in my positions, you get to analyze mature companies or mid-sized companies. And I was so curious to understand about their journey from the start. So I started to, as an investor and also as a just as a curiosity, for curiosity, I've started to basically go to meetups for startups and to incubators, accelerators, meeting funders. Investors, and that's where I started to approach that world, and was years back. But then since 2021 I started to also coach because I've been approached by a few startups and I started to coach startups founders, and from
I
there
believe
I
especially
did.
financially and on
So I have, yes,
blockchain
I
and
do have a fintechs that they usually are attractive, to my profile. But I have to say, I also, because I'm with a few basically platforms in London and in other obviously places worldwide, but now I'm only in London. Obviously, I'm dedicating my time. So because I'm with a few incubator accelerator, you always get a tech slash other verticals. So I had even a tech company, and I'm very fond of passionate about biotech as well. So on medtech, because of even the mission that they have behind, I find it very interesting. Usually, like are spin-off of universities or are anyway part of research teams, and you see really interesting startups. And in the majority of cases, if the founders are great as founders, so they manage to get flexible from that point of view, you get to know like the next unicorn, because obviously on the biotech medtech side there's a lot of room for growth, let's say, if they're doing the right thing. So but in general, so my advisory, so obviously now I am also advisor of I'm on the advisory board of two startups, and they are fintech. One is a payment related startup which is doing amazing things, which is accelerating and creating a fast basically app that can allow people, so African people, to transfer money instantaneously in between countries, so in African country, and they are working like intercontinental, but the plan is also intra obviously continental, and also to go intercontinental. And whoever doesn't know, because to be honest, I didn't know about how difficult it was to make transfers intra Africa. It was interesting to understand that side. side, because for people it costs a lot of money, for example, to transfer money just in between, for example, Ghana or Nigeria, and it takes a long time. So the founder Emmanuel Darko, like, he always, like, tells his story that his dad, he had a business, and it was better for him to fly from one country to another country to basically be able to, transfer the money and doing it like in a very cheap way. And imagine that. So he had to fly to another country, while now he's allowing it, to people to do it like instantaneously and with a very small fee. So the other one is, it's called Unicorn, and is a risk management meeting, app, tools basically, and is to mitigate risk. So it's born as an idea to allow startups. So while a Unicorn, which is another company I am at the board of, so Unicorn is a risk management, risk mitigating platform for meeting management. And the idea was created given the amount and rate of mortality rate of startups, especially like, after, raising funds and, putting some structure on. But a lot of times funders and companies, startups in general, with startups at the beginning, so when they start, to raise funds, and then they go, to seeds and Series A, Series B, so the mortality rate becomes very high, and it's because they forget to do simple things. And when I say forget to do simple things, it's like it's putting up, more structure, and it's about governance. Is about so the majority of times they forget about the governance, and is all about governance. So I do know, and the more you move forward, the more you need to put up, with any potential, not just regulatory driven, like obviously if you are in an industry that requires you, even like, from a regulatory perspective, but from an internal risk management point of view, and, for business continuity, it is very important from any aspect, to, thick, the governance, part. And so a lot of companies I've seen, like even VCs I cooperated with, and, startup VCs, basically they don't think, for example, meeting and having, board meetings, having a board also, or having board meetings, or having, committees, special committees meeting. They don't think as they are important as other, tasks, and, or like fundraising, or, coming up, with a new development and so on. But all of your decision and all of your, steps will be actually relying on the skill set and the mindset that you have. And that means if you have a board, it is very important that you discuss with the board, certain topics. And likewise, with other committees, it might be, resources, remuneration committees, and, a different type of committees. And so it's very important, to look at, those tasks and topics that usually are not really, or they are overlooked, and obviously we should pay that attention. And so Unicos obviously is a blockchain. Both of them are blockchain based, which is again another useful from a security and privacy point of view. It's very secure, and it allows customer to make sure that nothing is manipulated from a documentation point of view, or regulation point of view, or for example from a client data point of view, like data privacy. So which obviously it's another plus for these two companies.
You have worked with enough companies to I think understand the key ingredients that turn great ideas into truly inspiring, impactful businesses. So what would you say about that? What do you believe is the key ingredient when it comes to turning an idea into an impactful business?
So absolutely. I think the first key ingredient is the personality of the founder. So this is something which, you can have an amazing idea. You can be a very smart person, but if you don't have the personality, you can't get consensus, you can't raise funds, and you can't have people. So alone you can't go anywhere. You will need to have a team. So, and if you are a likable person, so someone that is very flexible and adaptable and likable, then you will have a team with you. But also the flexibility and adaptability, again, it's for someone that really can grasp what is required in the market. And so even though, they have, their own idea, but when you test it on the market and you do your market research, if the market is telling you something else, you need to be flexible enough to say, I'm going to change my direction, and making sure that, I can actually, fulfill what the market is requesting me. Now, it seems easy because
so rather than just trying to do what you want to do, it's all about being obsessed about the customer, isn't it? It's like being
But
obsessed
a lot
about
of
what they
funders,
want instead
yes,
of doing what we want.
but a lot of funders undermine this important criteria for them to move forward, because a lot of them thinks,
I
I
think
have
exactly the same.
they think I have this amazing idea, I'm a very skilled person, no one has it. But again, it's about testing that idea in the market and seeing, how the people are responding.
Maybe the reason why no one has it is because no one needs it.
So yes,
Maybe
and
it's
so I
because
would
no
say
one is
that's
asking for
that's
it.
an important ingredient, and of course, there are other things, which are important, and I say, the connection, so, and or the ability to create connections, and so networking, because once more, you can have a great idea, you can be, someone that is, doing something very differentiating, very different from others. But if you're not able to raise funds and so connect, or, if you need to raise funds, and, I see a lot of funders really struggling with amazing ideas, amazing skill set, but they are not capable to raise funds. And I'll tell you one mistake that everyone does. They think, I'll contact a possible investor. I met it through a dinner. I met it through a drink. They contacted them only once. They think, they receive an answer which is like, at the moment, I'm not interested, or I'm not interested. And they think it's done. And I always say, that's not the way it gets done. I've done fundraising so many times.
No.
You need to meet the investor for at least 6 months to 1 year. You need to create a relationship. Once you create a relationship, then they will give you the money. Because in the majority of cases, investors don't even understand what they are investing in. They just go with feeling. I like this person, I like this founder, I like this idea, I like the mission, but they won't give you, they need to trust you. And so this is a common mistake that I see. And it would be very useful for a lot of funders which have a lot of capability, a lot of skill set, to really, try to endure it a little bit more. And of course, if they can, bootstrap or, just go in a different way, good for them. But otherwise, and this is another thing. So a lot of funders are very reluctant to, give shares. So I'm not telling that they should be giving shares, because if you can, avoid giving shares, that's good, So, but at the same time, if you are struggling and you need to give, some commission, you need to give some shares, well, then just do it, because you need to, keep, you need to move, somehow your engine, and then, everything else will come along, because there are so many, different factors.
And even meeting with the investors a couple of times and gaining their trust isn't enough sometimes. I also have had some founders who are in our accelerator, or who I have been mentoring for years now, and they think building relationships is enough, but it's like the investors have a lot of experience. They have invested in over 100 companies, and they have seen some fail, they have seen business ideas fail, so they have this innate wisdom, not only about the founder, but it's like, even though they trust the founder, or maybe they have friendships with the founder, they might not be trusting their business skills,
but that's
or they might not be trusting
investor, though.
their project or their idea. Yeah.
But
So it's
that's
like
for
it comes kind of like it
sophisticated.
comes with a package.
Yeah, but for sophisticated investor, though, that's when you go from seeds to Series A and so on. When you are in the pre-seed
Yeah.
stage,
Yeah.
you
Yeah.
have not so many sophisticated investors. I rarely see sophisticated investor at that stage. And
Yeah. Yeah.
and
Yeah.
and so
Exactly.
when they are
Yeah.
not sophisticated, because they are angel investors in the majority of times, they have not that expertise in in the area,
Yeah.
and they
Yeah.
go
Yeah.
more
Yeah.
with the feeling. Likewise, I can say, of course, if you are an investors which have been investing for a long time, you will go with your intuition, and you will analyze, different also, different aspect of the startup. So you will, check if they have, a team already, how the team, like is working with each other, what type of skill set they've been integrated like into the company. So of course they will, value different factors. If they are already generating, cash, they are already cash flow positive, they will look at ratios like EBITDA, etc., etc. But having said
Mm-hmm.
that,
Mm-hmm.
I've seen a lot of times, even VCs, despite ticking all these boxes, if they don't like the founders and if it doesn't come from people that they can trust, they wouldn't put their money. But even if you don't, so I've done it myself. A lot of times I raise funds without knowing people, but I had given myself the chance to be known.
Yeah.
So sitting for again 6 months, 1 year, taking coffees, drinks,
Yeah. Yeah. Yeah.
dinners, lunch.
Yeah.
And then obviously after, they say, okay, she's good. I like, the idea. I'll put the money. But, it's just after a while, again, you need to be comfortable, to put those money. As you said, yes,
Yeah.
if,
Yeah.
especially for the sophisticated investor, like you need to have so many, the full package. And if, one factor is missing, you won't be getting the money, because there are a lot of startups. We are saturated now. There are way too many startups around, and that's why. So why
Yeah.
you?
Yeah.
So okay, I just met you
Yeah.
in an event. So why you? Okay, yes, you're smart. Like you have a
Yeah.
great idea, but why? There are,
So
yeah,
I'm gonna with this. I'm gonna ask you. I'm gonna ask you a
sure.
question. Um, do you think, because there are a lot of startups and especially the young generation, they're excited about building businesses,
Mm-hmm.
they have innovative ideas, and let's do this and let's do that, and they have this big dream of creating billion-dollar businesses and this and that.
Mm-hmm.
You have worked with startups and you have seen enough businesses, I guess, like me, fail and also grow and succeed. And we all know that only 1% of the startups make it at the end of the day. So, what's the difference between startup founders and just, you know, classic business model founders? What do you think? Because I think that's very much important when somebody is deciding to be a startup founder, or just, I mean, the question is, are you just interested in this interesting business idea and you want to just do it for business, or are you interested in creating a startup, dedicating your life to a company, 5 years, 6 years, 10 years, doing nothing but just focusing?
I totally,
Yes.
get the point, and I agree, with what you said. And so basically, what I find interesting, with all the founders I met, and every time I meet them, is to see that, as you said, a lot of founders, want to be, a lot of people actually nowadays, all the young generation have this pressure to be founders. They leave other jobs, they just focus on this. And I see a lot of them even struggling mentally, because they really are trying to achieve something. What makes the difference in between a real funder and not, let's say, a real funder, you can tell immediately, especially when you
Mm-hmm.
meet pre-seed startups.
Yeah.
And it's because it's is the way the funder already start structuring the work. So when they come with an
Mm-hmm.
idea, they already, is not just having an idea. They kind of already know that there is, some sort of consensus within the market. And so, of course, they will expand more, market research, and so on. But they have already done a little bit of due diligence, to see, is
Yeah.
actually my
Yeah. Yeah.
idea a good
Whether
idea?
there is a
Is
market
actually
or not. Yeah. 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 Yeah.
Exactly, as there is no market. So they've done their homework. So they've done already, they come, for example, to accelerator incubator. They want obviously idea validation even from us, but they've done already their homework and they are so structured. So for example, and I can give you the example. So for example, Unicorn. So Onni, like she's an amazing founder, and she always surprised me on how much detail oriented she is. She knows. So as a risk manager, I've been a risk manager for a long time. She never has been a risk manager, okay? But she knows so much about regulation. She knows so much about what it's required in the industry that it's so impressive. I was so like, it's just honestly like I was speechless because I find sometimes people even in banking don't have the right knowledge as she has, the type of knowledge. So that she's so structured and she's flexible, she's structured. So all of these key elements again is telling me, and she's finding, for example, she's looking for partnership, she's looking for customers, so she's open to.
So it's kind of like she knows her way and she knows how to build a startup.
And she's exploring all the venue, for example, on their side, and likewise other funders that have been successful. So they are exploring their venues and immediately understand which one is best for them and will go for that. So that is, I think, is the major point, because you can have the best business model again that or best idea and the combination of two, but if you don't as a founder also do your homework and you don't do your work and you don't structure, and the structure also, structure is a word that it terrifies, I think, a few people, because they say, some people think that they are not very structured. So I always say, even management, time management, okay, it goes along structure. And time management is another thing where a lot of funders fail, and they go completely into overburdening themselves. And I always say, as an advice, for example, just put down your days, the entire week, and just say, from this time to this time, I will dedicate 1 hour to do development, 1 hour to speak to potential clients, 1 hour to speak to potential partnership. If you, of course, you can be flexible. One day, you might not tick all the boxes on your, on your calendar. But if you follow your agenda every single day, you will be successful in the long term, and you will be so structured, and the structure will come along. And I always say the structure also changes, because obviously the more you do, the more you learn, because you're constantly learning, the more you adapt and the structure change. But you must have a structure from the start. And this is again another point that a lot of funders thinks, I'm too early, I don't need a structure. I've seen even VCs thinking, I don't need a structure.
You speak a lot about building infrastructure from ground up. And that's
it is very important.
What are the most human-centered principles you follow when scaling businesses, besides these you spoke about?
Obviously there are other skill set. Well, are you asking me in terms of hardcore skill set of a founder, or in terms of soft skills?
Yes.
Hardcore skill set. So obviously, when a startup starts, especially if we talk about tech startups, it's always helpful to have, a developer, or to have, a CTO. So someone that's been working in a CTO capacity already. Some actually common ground in successful founder is that they already had another startup. They kind of failed the first time, or they kind of never really failed, but never been really successful. But they learn from that, and they are able now to move forward to the next step with the other idea. And so generally I always say, if it's a tech startup, it's about, the tech side. So development side, obviously, if you have a developer as a founder, it helps so much, because you already
Yeah.
can create a
Yeah.
product. You can have your MVP there, and people will buy into it as well, because they know that you're technical. They know that you know exactly what you're building, and you know what you're talking about. The other important skill set, I would say, is sales fundraiser skill set. And this is, you know, very strategic. Or the marketing side, marketing, so anything that is related, you know, to, and sales and marketing go together, obviously, is to acquire, you know, new clients, you know, being known, you know, achieve, you know, new potential, like even, you know, just to test your idea, or partnership. Again, you need to have those skill set. And yeah, you need to have, you know, and I always say, for sales fundraising, I know a lot of people say, you know, you can do courses, you can learn on the go, but I think, you know, you need to also have that personality that brings you that skill set. And so, yeah, you need to be someone that likes to be with people, can grasp immediately, you know, what people likes, and, you know, like, yeah, what they want to see, you know, and so on. So those are, the type of, you know, I would say, our core skills. So, you know, development, so tech, you know, side, so a programmer, you know, like a developer, and then, a CTO, someone that knows even about regulation in the industry on the tech side, and, you know, anything that is related, obviously, to IT infrastructure. And then, the sales, you know, / fundraising, marketing, you know, skill set. Those are the key to start. So if you have the combination of those ones, then you can, develop your startup further.
Thank you very much, Olga. We have a lot of startup entrepreneurs listening and watching our YouTube videos. If they want to connect with you, how can they contact you? Through LinkedIn,
they can
I
contact
guess?
me. Yeah, LinkedIn, and also I have my own company website, so they can send me a message even through the website, which is www.olvevolve.com. Otherwise, LinkedIn, Olga Venosa, and they can get in touch. But I always say, please write a message, because otherwise I will ignore. I receive way too many, connections, and if you don't write a message that really, you know, makes me understand you are different from others, then I won't accept. So, always differentiation.
Thank you very much for this lovely, informative conversation. I believe listeners learned a lot from your experience, and thanks a lot to all of our listeners. Is there anything you want to add, Olga, before we finish, wrap it up?
No, I just want to thank anyone, obviously, like I thank you and anyone else that's been listening as well. I just say, obviously, the passion, because it's just one point that I always say every time I end my calls. It's about passion also. So keep following your passion. Make your, you know, work as a startup still your passion, and you will achieve and succeed a lot more than you think. So certainly, yes.
Thank you so much. And thanks to everyone. We'll see you in the next episode.
Thanks a lot. Bye-bye.
Okay, let's just stay here for a couple of minutes so everything downloads. Thanks a lot, Olga, for your time. It's been very informative. I learned a lot.
Yeah.